Raise your hand if you're sound asleep. Okay, we're all awake, great. Okay, so let's talk about what to look for in investors. So I'm gonna introduce myself, this is me. I like putting my pictures into presentations. If you need to reach me after this, you can find me on Twitter. So 2 words about Smartling, cloud-based enterprise software platform for translation management. Translation is usually a workflow. Translator, editor, reviewer, multiple people are coming in to work on the translation. And then what we do is we automate everything around translation except the translation itself where translators work. Machine translation, unfortunately, is just not good enough yet. So in 5 years that Smartling exists, we've raised about $63 million with investors like Wenrock, USVP, IDG Capital, Tenaya Capital, and Iconic. So let's talk about raising money. And what I'm going to do, guys, so that Smartling is based in New York. So if you were staying on this track, I think the presenter, about 3 presenters before, said, hey, screw the US, go to Europe. So with this presentation, we're going to try to unscrew the US. So I'm mostly going to talk about US market and venture capital, and then I'm going to try to run some parallels on what's going on in Ukraine and what's going on in the United States. So let's start with basics, different rounds. So everyone starts with a seed round. Typical seed round is anywhere between 100K to 1.5 million. And what you do is that, and you do your product. So in order to raise the round, first of all, you need to have your team, and team is very important. We're going to talk about it a little bit later. You need to have a decent market size where you are operating. You need to have a working prototype or minimal viable product. And you have to show some traction. And the goal for the seed round specifically is to figure out your product. This is all about product. Then you go into Series A. And Series A is where it's very important to figure out your business model. So you have product from seed, you go to Series A, it's about your business model. You need to have significant traction between seed and Series A to raise money at this point. And you need to know your product, you need to know your users, and there are a lot of presenters here talked about your users are very important, you gotta listen to them. And the goal is to essentially figure out your business model, make sure that it's correct for what you do. Series A and seed rounds, typically, you can find it here in Ukraine. There is very little money here in Ukraine if you go beyond A round. So what a lot of companies do is they leave and they look for it somewhere else. So Series B, from 7 to 40 million, and the goal of Series B is to scale your business. You have your product, you have your product market fit, you figure out your business model. Now you need to scale it as a business. You need to build your marketing and sales machine. This is a machine, and the reason that I call it a machine is the way that it works is that you put money in, it goes into marketing, marketing is generating leads, leads go into sales, and at the end you're getting your final deals. And the machine should work the way that the more money you put in, the more deals you get at the end. And then Series C+, this is your acceleration rounds. This is your capital for growth. You need to have everything figured out in your business, and all you need is money to accelerate the growth at this point. So let's talk about what do you need from investors. So let me ask you guys, what are you looking for with investors? Anyone? What is it? Money. We're looking for money. Great. Support. What else? More money. Okay. Connections. Anyone else? Relations. Okay. All right. So that was good. So there are a couple of things. First of all, when you choose your investor, I mean, it's very important. It's like marriage. You're gonna be living with those guys for a long, long time, and at the end, they're probably gonna own more of your company than you own yourself. So, and they're going to have a lot of control being on the board and being able to select CEO at the end of this process. So it's very, very important to find the right investors. So interview them. Make sure that you know what you're getting into, right? Make sure that they can help you find the next round when you're going to need one, right? Make sure that they have those connections. Can they help you find customers? And I'll show you some examples later on in this with our investors. Can they get you in touch with similar companies? So we do a lot of that. We share a lot of experiences. Do they, you know, how are they going to interact with you? Are they going to try to run the business instead of you, or are they actually going to help and stay away from, you know, daily operations? So all of those are very important. And the last one, actually, you know, a friend of mine suggested it. Check blind references. Didn't occur to me, but it's very, very important. Before you get into an engagement like this, definitely call up other founders that that are working with that investor and make sure that they're happy. And you have to, of course, read between the lines because relationships go both ways. So talking about smart money, I'm going to give you a little bit of examples, a few examples here. So First Round Capital is one of our investors, an amazing venture capital company. They're doing a ton of events. We have an annual portfolio events for CEOs and CTOs that they do in San Francisco when they get, you know, from anywhere from 200 to 300 you know, CEOs in the room, and then they do CTO summits separately. And it's very, very interesting energy when you get a lot of superstars like this together. There's a lot to share. They're doing quarterly portfolio events that are more local between New York City and San Francisco. They have a social network that is closed that you cannot share the information from, but it gives you an opportunity to log in and ask founders like yourself various questions and get very, very high quality answers, because if you try to look for them in the internet, the noise ratio is very high. It's very, very difficult to find generic information like that. So what I see the investors looking for, and I think it was in the presentations today, but the first and foremost, it's teams. The team is the most important thing that investors are looking for. Second is your growth potential and large market. If you operate in a small market, you will not be able to grow, and that's it. So you need to be operating in a large market. You need to be focused within the large market and segment it and make sure you address segment at a time, but the overall market needs to be huge. You know, when I'm talking about our market, Smartling market, it's $34 billion translation market overall. There's a lot that you can do within a market like this. You know, number three is excellent ideas. Obviously, if you have, you know, a stupid idea, it's just not going to work, no matter what you do and how well you execute on it. And then the last one is actually interesting. I was talking to a number of investors, early investors, and I was asking them, hey guys, how do you find the right person? How do you know who to invest into? And one theme was very common. People were saying, well, we look for founders who had a personal thing to solve. It was there personally, and they had an itch to solve that particular problem. It's either that, or they've experienced something before, and they knew it was a problem, and they needed to solve the problem. Again, if I relate it to Smartling, both me and my co-founder, where we were previously, we had problems with trying to localize, internationalize sites and applications and so forth. It was very costly and very difficult to do. So it was, I guess, a personal problem that we were very familiar with. So here's an example. When I'm talking about teams are very important, you guys probably heard about the company called Jet. That, I think, is still not publicly available with their product. So it was founded by Diapers.com team. Have you guys heard of Diapers.com? A few people heard about them. Okay, so read the Amazon book by Jeff Bezos. It has some recollections of that. So Diapers.com was very successful, went head-to-head with Amazon. It was very, very difficult to do. Amazon was just simply reducing their prices to kill them. And they've survived for a long, long time, successfully competing with Amazon. It's one of those rare success stories where you compete with a company like Amazon and can actually do it for a long time. Now, that ended, Amazon bought them finally. So at the end, they lost. Amazon bought the company. They made a lot of money, I guess, in the progress. But the important thing is the team that came out of diapers, they worked with Amazon a little bit, they left, and then they started another company called Jet, and they're promising to revolution, like change the e-commerce, essentially. So if you guys haven't heard about them, go read about it. It's a fascinating story. Bottom line, they were in stealth. They raised Series A, 55 million. They raised 6 months later Series B, 140 million. So if you're a first-time founder, you're not raising that money. And they still haven't launched, by the way. So essentially investors have trust in the team. And that's why they were able to get there. Let me skip those and talk about those at the end. So venture investor profiles, what do those guys do? So first of all, for them, the lead flow is very important. They have to make deals. They cannot not make deals. They raise their own funds, right? So, and the typical sort of the investment period is from 3 to 5 years. They raise a fund and then they need to spend it. They need to invest. Okay, so it's important to understand about them. When you're trying to reach them, if you just approach an investor, it's going to be very weird. They're just not going to know what to do with you. Try to find references. References are very, very important. Network and find references. This is the most important. So this is the best source of leads for venture capital and how to raise money. Now, second best source is today here is conferences, because conferences exist so that people could network. So try to get appointments with those guys and start talking to them. And then the last one, very surprisingly, investors are humans. So they have their own biases, they have their own beliefs, and everyone is going to be different. So do not give up. If something doesn't work with one investor. If something doesn't work with one, it may work with another one, but you have to learn as you go. You have to hear the objections, and you have to be able to kind of overcome them as you go. You gotta do your homework. You gotta do your research. So there are venture capital firms that have specializations, and there are a lot of different specializations out there, right? So some specialize in various stages. There are early investors, or late investors. Some invest seed, some invest round A, and so forth. Sector, software, hardware, B2B, B2C. Geography is very important. I know people who only invest in startups in United States Northeast, and they would not talk to you if you're not from Northeast. And I need to go and ask them why they're doing that. I'm curious. Probably they don't want to do a lot of travel. And then, decision making is one of the important elements here. By the way, all of this information you can find from their own website, if you read news, if you look at the companies that they invest into, and you can deduct a lot of those things, including how they do decision making, what do they invest into, what are they looking for in startups. So let me go back to this slide. So a little bit more on United States and Ukraine, a little bit of Europe here as well. So US obviously has much more mature capital markets and overall ecosystem for startups. So no question about that. As a result, you are getting potential, higher upside on your business, higher valuations, and less dilutions if you raise money in the United States versus if you raise money in Ukraine or even Europe. So it just tends to work out more like this. So at the same time, the United States is much, much more competitive markets. So I thought it was interesting to add the Techstars Boston Accelerator in here. They had 1,000 applicants and only 12 spaces. So that's the level of competition, which is pretty high. I think it's higher than some top universities. It's more difficult to get into some of those really good accelerators like Y Combinator and Techstars. An interesting thing about Europe, it's very, very fragmented. So essentially, every country needs a different approach, somewhat, and you need to be on the ground in each country. United States is a huge market, and it's one market. There is no difference between different states. So in terms of difficulty of approach in Europe or approach in the United States, I would actually say that United States is going to be easier to scale than Europe, simply because it's one language and one market. Another tendency that I'm kind of seeing in Ukraine is, so in the United States, people think big. They want to change technologies. They want to change world. They just go crazy with what they do. In Ukraine, I'm seeing a lot of people who would work on a small cash cow, and they create this cash cow, and it brings cash a little bit, and they're saying, you know what, life is good. Like, I'm making good money here. Why would I do anything else? So, which is kind of a little bit surprising to me, and I think partially it's an effect of not really develop the entire ecosystem where it's becoming difficult to raise higher rounds. And then another part of this, it's as you grow the company, it may be more difficult in Ukraine to continue to grow. I know that a lot of startups leave after either seed or round A and go to Silicon Valley, where capital is more readily available. And what I'm also seeing with entrepreneurs is very limited knowledge of US market. The markets are, if you look at Ukraine, even if you look at Europe and the United States, it's going to be very, very different. So if you're planning to target United States as a market, you have to be there. You cannot do it from here, from Ukraine. So this one is pretty much the last slide that I have. I think it shows very, very interesting numbers. So the number of engineers, if we compare Ukraine and the United States, is about 36x, right? United States has 36 times more engineers. Now, the volume of venture capital deals is 2,000 times higher. So what this slide tells me is that Ukraine has huge untapped potential to build things here. So I think this is a very optimistic thing, and I'm very happy about that, actually. Last thing, the most important I guess, characteristic of an entrepreneur is to be persistent and do not take no for an answer. But you have to learn as you go. Thank you. I'm not sure if I have time for questions. Do we have time for questions? Okay. Questions?
How do you see the potential case if startup will locate it in Ukraine, actually, but will work somehow for US market? How do you advise some support for investor? How do you see this?
How do I see the case of startups being in Ukraine and working in the United States market? You have to be in the United States. I'm sorry. You have to understand that market from inside. Founders have to go to the United States, work for 6 months from there to understand what's going on. It's very, very different. You can't do it from here. You just can't.
But do you guys keep some of the developers over here, or all of the developers in the US?
So specifically with us, we have 2 offices here in Ukraine. We have office in Dnipropetrovsk and Kyiv. In Ukraine, about 40.
Are you planning to expand?
We're expanding all the time, yes.
Okay, thank you.
Thank you, guys.